Hello, this is Stephen Malone with ComsFX. I hope you're doing well today and getting some good trades. Today we saw the market fairly illiquid, even though European stock markets finished a bit higher. The reason for the illiquidity in the marketplace was U.S. banks and stock markets were closed due to the Martin Luther King holiday. So today I was asked, how do you go about trading an illiquid market? Well, number one is you don't trade it, or number two is you wait for a break of the range that the market was in while it was illiquid. And what we see in the euro dollar is simply that. We have a range of about 35 pips or so from this top to this bottom here today. We can see that the market really didn't do much, from about 133.30 to about 133. And how you go about trading a break of a range is oftentimes to just step out to a bigger time picture, like the daily or maybe another time frame that you prefer, and look at the overall trend of possibly even some of the moving averages. And in this case, I'm looking at the 10-day moving average compared to the 21-day moving average. These are a couple of moving averages that professional traders look at. And when you have the 10-day above the 21-day, there is more of a tendency for the market to go long. So in this case, we look for the market to break. And we'll look for the market to potentially roll up to the weekly mid-high sitting right here shy of 133.70. We may actually see a push up to the high that we saw last week of about the 134 level. You can see here that based upon last week, we kind of have a little bit of a support range coming in somewhere in the ballpark of about 132.60. Also, if we have a move below the 32.60, there are some sell stops down around 133.50. That'll take us down to the 132.20 to 132.30 area, where we find a bit of support and some more bids in the market to possibly bid this back up. As you look here, we can see that this has a bit of sentiment to the upside, even though everything's fairly flat. You see every time we dip down, the lows are getting a bit higher. So there's a chance that even though we're tightened down right here, we see a break to the upside on the euro dollar. Now, about trading this, I would simply look for a break of the range high, look for a test of the break. That simply means to go down to a smaller time frame. Let's say I'm on a 15-minute chart. I can go down to a 5-minute chart and see if there's a couple of closes on the 5-minute chart that is above the trend line here, the 133.30 area, and therefore then it appears that the market's going to continue to push that way on a true break of a trend line. Then you would set our stop loss somewhere below the last low point right here. That'd give you a little bit of range here for the market to kind of move up and down and then possibly see it continue to rise. If you do get stopped out, you just look for a break in the opposite direction. But just be careful when you have the longer term moving averages moving in a certain direction, there's a greater probability that the market will continue in that direction. On the Aussie dollar, you can see that it too was in a fairly tight range today. The top of the range here at about the 524 level, and the bottom of the range sitting somewhere about 490 area. Again, about a 30 pip range. Not a lot in this. So again, if it's illiquid, not a lot of movement, you just get chopped around. There's no reason to necessarily be in this area. Wait for the break of the range. Looking at the longer term moving averages, again, we have the 10-day above the 21-day. A break of this level, we could see the market potentially roll back up to 535, then on up to about 564. Now last week, we saw this get up close to about the 600 range, just shy of the 600 level. So there is a possibility that we have kind of this double bottom effect right here and the market pushes up. If we can get a break higher and then a push up to about the 550 level and it can sustain this upward move up above about the 575, 580 area, then we look to see it push on up there to back to the 106. A break below here would see it fall back down and potentially roll all the way back down to about the 440 area, where there's some pretty good support. 440 or 1.0440 has been a pretty good support level over a number of weeks in the Aussie dollar. So again, we look for a possible break higher with our moving averages pointing up. And notice here that with this movement up, we also have higher lows seen the Traders Dynamic Index, suggesting a possible move up higher in the Aussie dollar. Well, those are my thoughts going into tomorrow with the euro dollar and the Aussie dollar coming off of an illiquid market. Again, just don't trade it. Take the day off. Look for a break of the range, and typically a break of the range will follow the overall trend of the marketplace based on your longer term moving averages. If it doesn't, be prepared for a retracement back into the range and a test of a possible break in the other direction. So in this case, we go long, break of 524, set your stop loss below here. That keep it a fairly tight stop loss. If that's too tight for you, then set it on the other side of the range. If the market were to break the other side of the range, you could do a stop and reverse in the opposite direction. Well, folks, Demon Low Compass FX. Hope some of this information will help you in your trading. Y'all make it a great day. Get some good trades. Talk to you next time. Bye-bye.